27th final trading day of the week. We've got an hour to the US Open, but more importantly, or just as importantly, we've got the key PCE in price index data coming up in a couple of minutes. So let me just bring on our calendar here. So PCE, it's the let me just minimize myself. There we are. The PCE number is the key inflation measure that the Fed prefer. It was one of Janet Yellen's favorite indicators, along with I've forgotten what she invented now. It was the churn figure. I've forgotten what it's called now. Good afternoon, everyone. Hope you're well. Emma, happy New Year to you. Everywhere's back. I believe everywhere's back to work except Taiwan and China. Hong Kong opened up yesterday. Asian markets are open that were closed. So happy New Year, everyone. Year of the rabbit from the year of the tiger. So I hope everybody has a better new year. Lots and lots of people in Asia now moving around. Obviously, the impact on the COVID situation, particularly in China, could be quite significant, but we'll see how a lot of pans out. But happy New Year to you, everyone. Gold, yeah, well, I've just been looking at my gold chart fee. We'll see on the first. We'll have a look at that in a minute. But really, it's this data. We'll see what this comes out at in a minute. It's just coming through my my platform here. It's a bit slow on this particular workstation. In fact, it's just coming out at the moment. So let's have a look what that looks like. It's spinning, so it's coming through. I can't see it anywhere on my Reuters or Bloomberg TV at the moment. But anyway, we'll come back to that as it comes out. Emma, we'll have a look at your favourite, the Dow and the S&P. I hope you've. Let me just go back to Emma. That it's just coming across my Reuters TV here. So personal spending falls to 0.2% from an estimated 0.2%. So it's more or less in line with expectation. There you go. You can see it on the screen there, hopefully. So the core number, the key one's coming much down, which was expected, but that's a good number. So this adds to the idea that the term rate may not get to 5%. It may not. The pause that was announced by the Bank of Canada this week in their rate hike cycle after they put up rates by 25 basis points earlier in the week may be coming to a fruition. Remember, the Fed speak is in lockdown because they start their meeting on Tuesday. They announced obviously late on Wednesday next week, but this might be taken into account by many. Personal spending is coming more negative as well, but the core number. Interesting. The expansion number's actually gone up to 3%. So, but it's certainly cooling. So there's still some resistance, or lots and lots of not resistance, but resilience within the US market. So let's have a look what that's done to. Let me just get rid of that for now. What that's done to the markets. This is and actually Nasdaq. Let's first up was actually gold, wasn't it? Somebody asking about gold. Let me just make sure that's out of the way. That's out of the way. There we go. Where's my? I've got. Right. Let's get back to the beginning. So let's have a quick look at the euro. How the euro's moved on that data. And as expected, you might have thought that it's a bid on the euro. So this idea that they may be, not that I don't really think they'll mention about a pause with regard to on Friday, but let's have a look at the gold fee. You were first up. Gold, as you can see here, this is euro picking up against the dollar as the news has come out, being announced. So 108.75 again. Gold should have got a bit of a lift as well, having been weaker today. Into its 200. This is the gold on the 1 hour time frame. Into its 200-hour moving average earlier today. The key 1920, 1922. Oh, can you see that? Yes, you can. The key 1920, 22 level here. This is the this is the 1 hour 200 period moving average at 124. 122 is a key level on the daily time frame, and this blue line here at 120 itself. So this is a big support we've seen all week. So we've been down into that this morning. We've bounced off the 200 period moving average. We broke into the upper half of the Bollinger Band, and the last 4 hours we've moved nicely up to touch the outside of the Bollinger Bands. The Bollinger Bands are now turning, opening, we're pushing the outside edge, so we're moving higher. 1935 is being tested at the moment. And we're also now reaching this key, next key level, which is the 50-hour moving average. So gold remains bid on the 1 hour time frame. On the daily time frame, it's a nice big rally, as we talked about yesterday. Big line in the sand is at 1949 level. We couldn't quite get to earlier in the week. A dollar shy of the key 1950 level. But gold on this end of day basis remains bid at the moment. As you can see, there's that 1920 level. So in the 1920 level, which is held all this week and plus, we haven't closed anywhere near it really. So for 1, 2, 3, 4, 5, 6 days now, haven't breached it. So we need to break on the daily time frame over this 1948 level, call it 1949, and need to break below 1920 if it's going to go lower. So gold is bid, and the news out of the US has helped that. If we go down to, I don't know, anyway, straight gold on the 5-minute chart, that's been tracking higher all day, and there's the news breaking as the dollar's weakened initially. Obviously, it take a while before the analysis is crunched, but the initial move was it's a weaker dollar. But certainly, good afternoon, everyone. Hope you're well. Happy New Year as well to you. And then Emma was asking about the Dow and the S&P on the 4-hour charts. Both of them had a strong January, incredibly strong January. First one here is actually the S&P 500. This is the futures. This is my futures chart because the markets aren't open yet. But this is actually got the daily. So this remains a bid from these lows. There we are. These lows at the end of December and the beginning of January at 3,800. We've rallied through the 200 exponential moving average at the beginning of the month. We were back to test it a week or so ago, but we've broken back over it last Friday. We were up Monday, Tuesday, Wednesday. Up Monday, Tuesday, down day Wednesday. But interestingly, it was a big volatile day where we opened negatively and we closed flat. But again, you see the 200, this big support area here on the S&P 500 is a big support area, 3,950. We've got the 50-day moving average, the 20-day moving average, and the 200-day moving average, all converging in this area. So we're trying to work out which direction we're going. So that's a big support area, 3,950 going forward. And we've been up 5 days since that. As far as your 4-hour charts are concerned, Emma, it last moved into the upper half of the Bollinger Band yesterday afternoon, rallied, then retraced, and it's then triggered, went long here. Can't see what time that is. Yesterday was that. In fact, that was, what time is that? Why doesn't it show me the scale? 4 o'clock yesterday. So that's been long. It's ran into this 4,065 at the moment, going sideways, but that remains bid. Your support is the midline here, the 20 period moving average at 4,035. And again, you'd like to see this break higher to test this next level up. If you go up to the next higher time frame, the daily high we've had recently is that one there at the back end of November when we went to 4,092. So that's your next upside target for end of day and 4-hour traders. So that's your 30 points from where we are now at 40,065 to 4,092 from 4,095. So, it's within striking distance on those, on your 4-hour chart there. That's the S&P. The Dow, where's my Dow chart gone? Dow, that's a weekly chart. But again, it's recovered quite nicely from these lows in December as opposed to January. It's rallying, it's retracing now, it's rallying again. So 33,964 we trade at the moment. It's not, let me just make sure that's live. Sure that's moving around actually. That might be that. Oh no, it is. It's in, yeah, it is moving. So again, another one that's been positive from about the 23rd here in the upper half of the Bollinger Bands. It's been over the 50 period moving average, and it's etching higher or inching higher. There's the resistance there, 33,800. Then it's broken high, and it's broken high, and again. So the next level, you look left, the next candle cluster is there. at 34,150 to the upside as far as the Dow is concerned, and then let's put those two lines on for you. And then through there at 34,300, that top is the next level to the upside. So again, continues to trend high. I don't know how you trade this, Emma, or what strategies you use. It'd be good to find out. So do let us know, because you're always on here, and you just concentrate on those two indices. I don't know whether you trade them on open or you're on a swing trader, but certainly that's moving up from this pivot low all the way back down here at the end of the year, and Dow is currently only 3% to the good. That doesn't seem right, but yeah, that must be right. Only 3% to the good from the lows, but 10,000 points up from the 32,000 to 34,000. So 34,000 next line in the sand as far as our round numbers concerned for you, Emma. Ronnie, good afternoon. Hang on a minute, what happened there? He's gone. There he is. Good afternoon, Ronnie. Euro asks Collins. I say Euro initial reaction was to the upside. Starting to move down here on the 5 minute, but if we go to the hourly chart, we've sort of drifted lower this week. We've had a breach of the key 109 level. We got to 9-month highs up here at 109.27 or 28, 29 during this week. We gave a lot of that up yesterday on the good US data that came out. Trended lower quite nicely under the 20 period, under the 50 period having tested, and then a big spike down into the 200 period, found support outside of the Bollinger Bands, bounced up that quite quickly, but then ran into resistance at the 50-hour moving average. Broke back under the 20 period, but the low today was higher than the low yesterday. It's higher than the low on Wednesday. It's higher than the low on Tuesday, etc., etc. So it's sort of moving up, but we're sort of flattening out at the same time as well. So the upside break of 109 needs to hold on an end of day basis to move to the upside. But here intraday, we're down. We're under the 50-hour moving average. We're under the 20-hour moving average in the under half of the Bollinger Band. Support is there above 108.50 at 108.55. And resistance is there at 108.93, but before that is 108.81 as we go forward. That's where we are, Collins. This is, as I say, if we look at the, where's my calendar going? If we look at the calendar, there's not a great deal of hot data to come today. We've got the COT report later on, but we've got pending home sales. See what they've turned around. Like the new home sales yesterday were better than expected, and we also got Michigan consumer sentiment later on today as well. So both of those in about an hour and 20 minutes so far. So see if that moves the dial at all. But there's your euro capped by 109 today and supported by the 200-hour moving average. So that's the range for euro. On an end of day or intraday basis. Terry, hello. Aristi, hello. Annie, hello. Chris, hello. And Ishik, hello. Hope you're all well. Next question comes from Arucha. What should be the impact of the news release of PC on dollar yen? Well, we see the dollar's weakened, so see what the yen has done. So dollar yen yesterday breached 130. Had a very volatile day yesterday. We were down here close to 129. We went all the way through 129, 129.50, 130, and then sort of settled around 130.50 through here. There's 130.54, but there's our top. So quite a long rally up. Thank you very much. Then we broke. Interestingly, then drifted into close, breaching the underside of the Bollinger Band, the 20-hour moving average this morning, and then it went short back under the 50 period, but not as low as we went yesterday, all the way to 120 now. We went to 129.50 before we bounced and then started to consolidate around the 130 area. We rallied up, didn't know what to do, went back down, having run into this 200-hour as well as the 50-hour, the blue line, and then we've moved lower. So we've got the 50-hour, although it's sideways, we're still sort of aligned, if you like. When you've got the Bollinger Bands and the moving average going sideways, there's no trend going on. But here, as you can see, we're edging lower because we're in the under half of the Bollinger Band. We're under the 20-hour moving average, the 50-hour moving average, and the 200 moving average. So that's the resistance level there, 130, and about 5 or 10 pips above that. And in this current hour, we've got a weaker dollar thanks to that data that's come out. So expectations are, the Fed pivot might be coming, but obviously there's a massive amount of central bank speak next week after the curfews are over, and we've got the Fed on Wednesday, we've got the Bank of England on Thursday, and we've also got the ECB on Thursday. So it's a huge week next week. We've got a massive week for earnings on top of all that. And then just to round the week off very nicely, we've got non-farm payrolls this time next Friday. So a huge, huge week. And also the end of the month rounding up as well on Tuesday. So all sorts going on, my friends. So lots and lots of opportunities. Obviously, with opportunities comes risks. And as ever, always manage your risk. Now, everybody seems to have just stopped and just saying hello. So there we go. That's the dollar yen. It's edging lower intraday, but again, on an end of day basis, you're actually with the trend because the trend continues to decline from these heady heights at 150 during October. So we were down significantly in November, we were down significantly in December, and we're down significantly for January. So our low for the month, interestingly, as we come towards month end, our low for the month took us here at around about 127.25. So that's the next line going forward as we move into the next month. But as you can see here, dollar's bounced a wee bit from that level. But as we saw on our intraday chart, and if I zoom that up a bit, you can see with the 20-day moving average is providing significant resistance last week and again this week. See how we haven't been able to breach that. This is Monday's big up leg. We were down Tuesday, down Wednesday, bounced, retraced a wee bit yesterday, but we haven't moved out of that range. And then we're down again today. So a break under 129.50 and certainly down to 129 for the end of the end of the week would be negative for dollar yen. A break over 130 and certainly 130.50 takes us to the upside. And I've just realised I haven't done something I should have done earlier today. And Andrew's just been working on it, I think. Is that the question? Yes. Yeah. That's what happens when you don't write stuff down when you get to my age. You forget stuff. Yeah. Okay. Protus, good afternoon. Anything you want to talk about? Any charts? Any assets? Bitcoin to Apple to, I don't know, to Tesla. Tesla had a great day yesterday. 12% rally. Ishmael, anything from you, my friend? Sapphire, what happens to the dollar? Seriously, very weak this few weeks. I don't know what I mean. What happens to the dollar? Seriously, very weak. Relatively, but guys, let's have a look. See what's happened to the dollar. Dollar, let's go take this up to the weekly chart. Dollar had an absolute rock and roll second half of 2021 and even more rock and roll 2022. We went all the way, over 100 for the dollar index is a very, very high level. Even though we come crashing down towards that, that's the next big support level. Historically, as you can see on the weekly chart, this is, in fact, let's take the monthly chart. I don't know how far this is going to show you back. I don't know if it is. These MT4 platforms aren't marvelous. This is taking me back to 2008. That is a long way. So this is the monthly chart for the dollar index, the main measure of how strong the dollar is. It's an index made up of 6 of the major currencies, or 5 of the major currencies, plus the Swedish crown. People in Sweden won't mind me saying that. It's no disrespect to them, but that's how the dollar index is constructed, and it's weighted very much in favor. The 6 currencies don't have the same weighting. It's very much in favor of the euro. The euro accounts for more than 50% of the weighting of this index. But as you can see, where we are now, this 101 area, it's still, historically, this is going all the way back to 2008. Historically, it's very, very, the dollar's been very, very strong over the last 2 years principally because of the pandemic and the crash and the safe haven bids it's had. Obviously, if we look at these monthly candles, what an absolute shakeout. We're still down here for January, but December was negative, and November was the big shakeout candle, wasn't it? Big negative engulfing pattern there. Down we go from this heady highs of 115. So I say historically it's very high when you say what's happened to the dollar. So one would argue that the pressure to the downside will continue if we continue to get the idea that the Fed has done enough. This rapid rise. Remember, they rose rates 475 points, 475 basis points, 4.75% in a period of 9 months. They've never done that since 1980, and they did that in 1922. They've never moved rates that aggressively in such a short period of time, because the feeling was they got behind the curve, and the argument that inflation was only going to be transitory, which they hung on to for many, many months, has proved to be wrong. We went a big spike, close to 11%, wasn't it, CPI in the US? The dollar will continue to decline. It's continuing to decline. I'm not predicting it's going to, but you can see as a trend-following trader, you want to be short. You needed to be short this, and there's nothing at the moment to suggest that is over. Next week could be critical, but we've been saying that for a while. 25 basis points. They're still hiking rates on Wednesday as far as the market's concerned. There's a 98% chance, according to the futures market, that they will hike rates by 25 basis points, and there's a 2% chance they'll go to 50 basis points. That would be a shock if they got that aggressive. They're saying they don't need to, and the data today is sort of backing that up, that PCA data. So dollar, you could argue is likely to continue to weaken. Here we've gone down into the 1 hour time frame. It's been very, this week and last week has been, moving lower, but not very clear direction-wise. So it's really in a sort of channel here. So there's that 101.25 low, which we got to again yesterday. We got to it also on Wednesday, and also at the beginning of the week we were down that level, and last week we'd been down this 101.27. So there's the 1 hour 200 period, and you can see we haven't been over that. If I zoom this in, you can see we haven't been over the 200 period on the 1 hour candles for a long time, not since right at the beginning of January. So it continues to move down, perhaps in less aggressively than it had been, but certainly it's not in an uptrend. You can certainly say that. Okay, Felix, good afternoon, and Cannavaro. Thanks for the explanation. Appreciate it. That's not a problem, my friend. That's all I'm here for. So, anybody else? You're all interesting. You're all on YouTube. There was one person came from Facebook. And that's our call. Nobody else in here. Okay, not to worry. It's Friday. It's the end of the week. I don't mind. I'm happy to stay here as long as you guys want to stay and look at something. But so let's just go through the majors again then. So the euro key levels to watch as we go into the US trading session and the end of the week is this 200-hour moving average down here at just above 108.50 at 108.55. We've been into the zone to test it in this current hour of bounce. So resistance for euro today 108.82 and then 108.93 to the upside for the euro. Dollar yen so far for the rest of the day sort of channeling sideways. The key level is the key 130.00. The high from yesterday took us to 130.50. Doesn't allow one to get there today. Current hour is down, so we're testing the support at 129.50 for dollar yen, and then 130 to the upside. So there's a narrow 50 pip range at the moment. Other US data might move that. It's unlikely given that the PCE core index number didn't move things. Sterling continues, again, another one's tracking sideways towards the end of the week. 124 is the big line in the sand, which we haven't been able to hold. This is the 1 hour chart again for cable. Looked much stronger yesterday as we were banging into it a few hours, but we've been down today. Again, another one under the midpoint of the Bollinger Band, under the 50-hour moving average, and then in to test the bottom of the Bollinger Band and the 200-hour moving average. And we've bounced off that so far today. Any more questions? Any more? Lots of you that are saying hello. Any actual charts you want to have a look at? Because that's what we're here for, my friends. Felix, Protus, Ishmael, anybody? Protus, let me know. Okay, I'm here to help. Okay, so that's sterling. Dollar CAD following the Canadian central bank dovish hike we had on Wednesday. Interestingly, continues to unwind. I thought we might have had a bit of a bounce there, but clearly that 200-hour moving average at 134 has held from the. This is the dovish hike. We rallied and then bounced off it. Earlier in the week we'd already done that earlier in the week, and we'd already done it at the beginning of the week. So big resistance 134, the 200-hour moving average as well. And we rejected that, and again another one that's been trending nicely lower from the break of the midpoint of the Bollinger Band, under the 50-hour and out of the Bollinger Band, but we continue to hug that Bollinger Band down. The squeeze here was the sense that something was going to happen, and indeed it did. So lower into close, lower to open, and it's retraced, tested the back from the low. And the outside of the Bollinger Band into the 20, didn't want to break, tweezer top set up, down we go, bit of spiking during the next hour, then we go down again, and then we go down again. So dollar CAD 133 is the next line in the big line in the sand, but 133.10 is our current low for today. There we go, 133.12. The support zone there, but 133 is the next big line in the sand for dollar CAD. Continue to unwind on the daily time frame. That's very much in line with the daily trend to the downside. So a rally in dollar CAD doesn't look like it's happening thus far today. Australian dollars had a really good strong week. We're back over 70. This is 70.50, this blue line here. Stop 70. I'll zoom this in again. And you see the trend remains set. The 50 period is being tested. This is the 1 hour again. So we've rallied up through 70, rallied through 71. We've topped at 71.25 this week. We're channel bound from the initial rally to it on Wednesday. Couldn't break much higher on Thursday. We haven't been able to do that today, and we're very much channel bound. 70.71 and 0.72, 71.25 is the high. We've had a big Australian holiday. The 25th is Australia Day. Many people have taken an extended weekend as well, so there may be some low volumes in there. So maybe some action come the next week for the Australian dollar. But 71 is currently holding, maybe tested, and 70.50, and then this 200-hour moving average takes you all the way down to 70.15. So 0.7015 for Aussie supporters. Everybody's just disappeared. Oh, obviously bored you all senseless. There we go. I'll wrap this up then if nobody's interested. So gold continuing to hold its gains to the upside at 14.98, needs to break to the upside. For 19.20 needs to break to the downside. So there's what's that, a $28, 25, 26, 28, 29, sort of $30 range for gold at the moment, but still looks pretty well bid there on that daily time frame. Stock markets, the S&P 500 also continuing to edge higher from the January lows down this 308 level, up over the key 4,050 resistance level, and futures at the moment, this is the futures market, currently trading at 4,060, so 10 points above the key 40,050 level. NASDAQ, let me look at the different NASDAQ chart. I've got the NASDAQ 50, there we are. NASDAQ, big old rally here for the NASDAQ for both, the daily for during November, down for December and a big rally in January. But obviously, if we again look at the weekly charts, that's the UK. I didn't think that was right. That's the UK one. It's not the Nasdaq. It's UK 100. Sorry. Just wipe that. That's the US 100. There we are. This is what I was trying to show you before. So big rally for January from these lows at 10,700. We're right up through the 20-day, the 50-day, and now we're rammed into the 200-day, and we've poked over it yesterday. So we're nearly 12% to the good from the lows of January. So 12% of the good for the Nasdaq, having had a really obviously big decline during 2022 as we went down, retraced down, big retrace there during the summer. Didn't pay out because we then went lower, then went really sideways, bit of a retrace there, couldn't get over 11,000, 12,000 level, and that's where we are now. As you can see, a key level, 11,900, the psychological 12,000 level just above us. We're just above the 200 exponential moving average. If I change this, the properties of this moving average, oh, it's the simple one. I thought it was the EMA. No, that's the simple one. So that's even more important that it's broken the 200 period moving average. My concentration is on euro, says Protus. I liked it when you touched on Bollinger Bands. Okay, I really appreciate this. Protus, we're here to help, my friend. Okay, different. There's lots and lots of different setups. This just happens to be this particular setup. Just happens to be the Bollinger Bands in green, obviously, and the moving averages, the 200 and the 50 simple moving average. So the midline of the Bollinger Band is the 20 period moving average. Anything above that, you want to be looking to go long. Certainly when you're above the 50 period moving average, you want to be looking to go long. And anything over the 200 period moving average, you want to be looking to go long. Anything under it's the reverse. So, but can this first break of the 200 moving average happen or hang on? It didn't happen as we were coming down. Look, this is the daily. See how we ran into it here in March. We were shy of it here at the height in August. We were shy of it here when we rallied from the floor here in October to the November high. But now, and then we declined even lower in December. But now we've rallied up. Let me just show you a different. I set up a different profile. I think it's on my default profile. With the zigzags on for the Dow. The Nasdaq. There we are. So if we go to the daily, you can see what a strong, hopefully you can see that, the blue's positive, the angle is key. So a big down here from the middle of December to these lows in January. So we've rallied quite significantly. This is again, it's not the simple on the EMA, I can't remember probably the moving average. It's the simple 200 period moving average. And as you can see on that other chart, we were over it yesterday. So can we hold it? We didn't. We didn't in the rally, in the crash, the down year that was 2022, did we? Into it, shy of it, into it. But there we go, big M pattern there. And is this going to continue? Possibly, who knows? But as a trend follower, you don't overthink too much. Don't think too much. You just follow the rules. Okay, so this particular chart here went long on this day here. This is this setup here. On an end of day basis, took you long here on the 10th of January, and you've been long ever since. You've trailed your stop loss up. You might have closed it there. You got back in there on the 20th. You're back over and you're running high. It might take some profit here as it's got to the key resistance at 200, but stalled for 3 days and then burst through it yesterday. So see where we finish the week. Okay. So that's the black chart. So I know everybody yesterday saying they preferred the white chart. So let me just go back to the white chart, which is called my is it live profile? I think it is, or is it? I think it might be. That's one we're looking at, isn't it? That white one there. Yeah, that's where we left, wasn't it? The US Nasdaq with the Bollinger Bands. No problem, Protus. Mohammed, follow the rules. Absolutely. Gold going to 18. Well, you were talking about 21,000 yesterday, Mohammed, my friend. 1980 is a bit closer. Going to 1980 or going down to 1807. Well, that's a big call, and I'm not going to, I'm not going to predict those sort of things. I don't predict. I follow rules, which says when you go long, you want the trend to be on your side. When you go long on a daily, you want the weekly to be long. When you go on a 4 hour, you want the higher time frames to be on your side, and that's certainly what's happened here with the gold chart. The big break for gold traders was this one here, was back here as it broke over the 50-day moving average back at the beginning of November. So the 4th of November would have been a first entry as it's gone back over the 50 period from a big sort of a down October we had, didn't it? But that was a positive day, followed by another positive day, followed by a big positive day. So 3 of the 4 of those 5 days, some big positive candles. That initial surge took it from down here at 1630 all the way to 1750, over that 1750 level, and it finally petered out at 1775, retraced for 4 days, went sideways, but still held most of this move, retraced a wee bit of it, held the 1725 level, that then became support, sideways and up, and then breached the 200-day. Obviously, there's a big resistance level through here. It couldn't break the next line up, which is this one here, 1800 for a while. But it was still biased to the upside because the up candles, the black up candles, were bigger than the down red candles. So it rallied, added more gains. Interesting, those final 3 trading days of the year when not many people are around, volumes are a bit low, but they can be very significant. And we started January very positively. And off we've gone, thank you very much, through 1900, stalling at 1920. Then we broke through it. 1920 is now our support for the last 6 days, and 1950 is the next big line in the sand for gold. So gold remains bid. And when you look at it like that, as we said yesterday, Mohammed, 1980, your first target isn't that far away, is it? We go to the weekly time frame. It's certainly not that far away, is it? Weekly time frame takes us to 2050. So 1807, yeah, it's a support area. That's where the 50-week moving average is. We've got the daily 1807 down here, and actually that's around. What is that? Is that the 50? Yeah, 1825 is the current bottom of the Bollinger Band, and the 50-day moving average. So that's a big support area. Your 1807 sits significantly below that. So yeah, there's nothing to say that's going to go short yet. Don't try and guess till it rolls over, my friend. So there we go. Protus. I really follow the rules. Absolutely, Protus. And it's as simple as that. Most people find it difficult because we're impatient, we're indisciplined, we always know better, we're human beings, wherever we are in the world, we always think we know better. But follow the rules, keep it simple, don't overcomplicate it, and look what can happen when a trend can run and can keep going much longer than you can be liquid. So don't fight the trend, always be on the right side of the trend. Has been my mantra for a long time. Mohammed, good afternoon, good day to you, sir. How are you? Please, good afternoon. Next week is NFP. It's a huge week next week, Mohammed. Before non-farm payrolls on Friday, that really wraps everything up. On Thursday, the week, there's 3 big banks reporting. The biggest of all, the Fed on Wednesday. They meet on Tuesday and Wednesday. They announce what they're going to do. Markets think it's going to be 25 basis points. It's 98% chance according to the Fed Funds Futures options market of a 25 basis point hike, so taking it to 4.5% for the Fed. The following day, we've then got the Bank of England and the ECB, the Central Bank of Europe, with their rate announcements, also expected to hike rates or having to hike rates. Both of those have talked about hiking rates on Thursday. Thursday's, it's a big week for earnings as well, but the big tech companies report after the US market closes on Thursday. Apple, Amazon, Google, and there's lots and lots of others next week. There's been lots this week. Earnings have been a bit better than market was expecting, but not as good as that previously, which is not surprisingly. And then Friday we got non-farm payroll, and ahead of that we got ADP on Wednesday as well. So a huge week, Mohammed. Absolutely, lots going on next week. Will these trends be broken by the data next week? Well, at the moment, it doesn't look like it. The trend here, for instance, on this gold market, still looks to be going up. But don't count your chickens. Do follow your rules, as Protas said before. Mohammed, Bitcoin. Well, Bitcoin's had 2 great weekends, hasn't it? Are we going to have another rally this weekend? Have I got a Bitcoin chart here? I should have. There it is. 2 strong weekends. There was Monday's. Actually, we've got the daily. So there's the last 2 strong weekends. Big leaps up on the Monday. Big leap up on the Monday. Over the 200-day moving average for the first time. Let's talk technical, not emotional about Bitcoin. The first time since back here in March 2022. It didn't last very long, did it, last time? And that was collapsed for the rest of 2022, having had a bit of a rally. But is this one different? It's difficult to tell, but we've had a big move for Bitcoin since the beginning of the year. If we put our little indicator on here, you can see this low here when we were at 15 something, 15, 16. It's a 40%, 50% move. 40%, sorry, 40%, not 50%. 40% move for Bitcoin just this year. So the psychological 20,000 didn't play as a psychological level. It burst through it over the weekend. So 21, then 22 became the next support level. We've been over 22,000 all week, and we've even been over 23,000. If I put 23,000 on there, up there. So our high this week has broken 23,000, 23,600 earlier yesterday. So continue to high, and that's the key one. This is the daily, remember. There's the 200 moving average. So 1, 2, 3, 4, 5 days over, and a big breach and a break of this level. This 20,000 level we couldn't get to. On the 19,000 we were pivoting through here all of December, and so it's been a big move, and it could be a big move to the other direction as well. But at the moment, it's had a good day, a good few weeks, and Bitcoin remains a bid to the upside. Obviously, 30,000 then becomes the next level, which is all the way up here, but takes us above where we'd been as we came down. The crypto winter, the problems with the FTX obviously hasn't helped, but certainly 25,000 is the next sort of level here you'd want to break, and then that gap comes in at 27,700, and then the 30,000 level, which we rotated through during May and June. So yeah, that's gapped, moved. It may return quite quickly as well, but at the moment it's bid. Terry, good afternoon. Is there anything you want to talk about? Anything you want me to talk about? Any asset you want to have a look at? Whether it's an option, whether it's an asset such as any commodities, any particular stock? Please let me know. Langer, hello Langer. You're at the webinars, weren't you, this week? Good afternoon to you. What's he saying? Any special settings on Yuku? I don't know what you mean. Yuku? Special settings on Yuku? Am I missing something? Yen Korean, do you mean? I don't know. Any special settings on your account? Is what you mean? Not really. No, I just don't get Terry. This goes for everybody. Obviously, don't get too hung up on tweaking the indicators. Unless you find something that works for you. I was watching a guy demonstrating RSI today for 1 minute chart, and he was looking quite a long way back. He had his RSI set at 150. It sounds a lot, but when you're only trading 1 minute charts, it's not a lot. So it's all down to 150 minutes. It's not a long time, is it? In the whole scheme of days. But that's don't get too hung up. And these are what you can see here, Terry, is standard settings. So this is the Bollinger Band, the green lines, the upper Bollinger Band, the lower Bollinger Band, set at 2 and 20. The blue line, I mean, these are old as the hills. The 50 simple day moving average, it's good enough for me. It broke. Interestingly, see the Bitcoin here before this big breakout, it tweaked above its 50-day a couple of days before that. If you didn't believe that, you might have jumped in on that day. You might not have because it was a Monday, wasn't it, on our charts? Because we don't offer it over the weekend, so it's what's that, the 12th? Was that a week? I can't remember. So, yes, that was the weekend, wasn't it? The Monday. No, it wasn't. It was the Thursday, wasn't it? That's the Thursday. That's the Friday. Sorry, I'm talking nonsense, aren't I, again? So that was the Thursday. This is the Wednesday. That was the Thursday, Friday. That was the weekend here. Obviously, this gap. Then we opened on Monday. Then we went higher here on Friday again. Then we gapped again on this Monday open over that 22,500 level, over the 200-day moving average as well. So no, these are just standard settings. So standard moving average 50 period here. That's the Bollinger Band. This is ATR, one of my favorite indicators. If you talk about indicators, Terry, the ATR is probably my favorite of the oscillator indicators, simply because it's an absolute. It is what it is. It sounds a bit odd, doesn't it? What does it mean? Well, it means it's absolute. The ATR, the average true range. So how far these things move. And the beauty of the ATR for something like this, when the markets are gapping, is that it takes into account the gaps. So the ATR, so the average true range that the Bitcoin has moved over the last 2 weeks is $950 a day. That's a big move, isn't it? Obviously, depending on the spreads and what have you, but that's a certain move. MACD, a default setting again, 12, 26, 9 for the fast and slow moving averages. There's the signal line, there's the histogram, nothing special there. An RSI set at 14, as I say. I was watching a guy talking about RSI set at 150 for the 1 minute charts. Trading, he's a guy that trades the open, trades stocks at the open, but no, not particularly. So yeah, don't overcomplicate things either. Have things that work for you. I've always liked Bollinger Bands. I've always used them. It's measuring volatility, it's measuring momentum, it's measuring direction. When they're sloping down, that's the 20-day. So that's a downtrend. That's an uptrend now because it's turned up. It's a better example using Bitcoin, but there we are. That's an uptrend, isn't it? Look, you're in the upper half of the Bollinger Band. Everything you say about Bollinger Bands, look to be long when you're in the upper half of the Bollinger Band. Keep it simple. Don't overcomplicate it. Don't have too many indicators. It paralyzes you sometimes. Analysis paralysis, one of those other phrases. Langer's asking about sterling. I don't think so, to be honest. There's not a lot. The dollar didn't. Well, it's weakened on the key data today. Oh dear me. On the PCE price index data, Langer, and look. This is the hourly chart. It's I don't know. It's quite volatile yesterday, so you might have been caught out of that. There's some big moves, so we went down, rallied up again, but the 124 was the pivot area. We've broken that. We went under that here this morning, and it's been drifting lower ever since. Added to short, we could have added to short position down. It's gone under the 50-day moving average, and it's gone down, and it's gone to test the 200. So it's a classic move from the top of the Bollinger Band through the midline, through the 50, into the outer Bollinger Band and the 200. So that trade might have been taken off for many approaches. The MACD, I'm just talking about this on the 1 hour. The MACD is continuing to move down, so that's down. But the daily time frame remains sort of bid to the upside, but we're waiting for a break of 124. But we've been waiting for a break of a significant break of 124 for 8 days now. Our first stab was here, so it's 1, 2, 3, 4, 5, 6, 7, 8 days where we haven't been able to break the 124 level. So that's suggesting perhaps it is going to hold. But as I said earlier, it's a huge week next week. We've got the ECB, but more important for this pair, we got the Fed and we got the Bank of England. So 124 is a big line in the sand for end of day traders, but you've been bid certainly as a Bollinger Band trader from the 9th of January. You might have got out there when it first touched, or even there when it first touched the outer Bollinger Band, but it's been rallying. That squeeze there on the 11, that's a positive, something's going to explode, and that's what's happened. Every time we get the Bollinger Band squeezing like that, it doesn't happen very often, but when it does, it's going to be really exciting because the move can be quite explosive. And that's what's happened there. So as that's formed there. Probably didn't form until the following day here on the 13th at 122.27. But you've had all those pips all the way to 124. It's a big 1.4% move, 1,739 pips. So 174 pips. Easy to the upside as it ran to 124. I mean, it went even higher, but 124 was the line in the sand. So as far as today's concerned, Lang, if that's what you're talking about, so that's still bid. So any short positions, you're going against the trend. So the 4 hour actually seems to have rolled over. Or it seems to be rolling over. You can't tell yet because this candle isn't completed. It doesn't complete till 8 o'clock tonight, but it's Friday. It's the end of the week. Lots of positions will be taken off. So a lot of this could be profit taking from the rally to 124. Nobody wants exposure over the weekend potentially with the big central banks coming up. So that could be that, could not be that as well. Could be the big players that are in there for a long time messing with you a bit. But yeah, there we go. And as far as the 1 hour is concerned, there's that drifting lower today. So again, that went short there at 5 o'clock, 6 o'clock this morning. You would have added to your position there at 9 o'clock as it's gone under the 50-hour moving average, went sideways for a while, but it's now unwinding, but it's got to a key resistance level. And again, lots of people might be getting out as it got to that 200-hour moving average on a Friday ahead of both central banks are about to report next week, 123.55. Obviously, if you're in the US and you're trading this, you've still got all Friday left, but European traders, Asian traders, markets closed. And European traders Friday afternoon, so 123.50 is provided the support, but we're back down there again now. So whether you keep that on or not, that's up to you. Trail your stop loss will take you out when it retraces, but that's continuing to trend lower today, even though the 4 hour, as I say, and the is rolled over a bit, but still yet to break, and the daily remains very much bid. So you're against the higher time frame trend when you're going short on your 1 hour trade. So bear that in mind. However, if you're trading the 5-minute chart, the 1 hour is short, the 30-minute is short, 15-minute is short. So 5-minute traders were looking to go short, and that would have gone, you'd last gone short there at 25 minutes ago there, as it's broken under half the Bollinger Band. It's under the 50-minute or whatever it is, the 50 period moving average, and down we go. We got a few pips on that on the 5-minute chart. So it's all about time frames. It's all about your strategy. Have a strategy, trade your strategy, understand the time frame that you're trading. Shorter time frames seem to be quicker. Well, they are obviously quicker. Your targets are less. Your stop losses are less. So it's use less margin. But got to be able to be flexible and change your mind. Watch my scalping strategy video webinar on mindset of intraday trading as well. Paul is asking about gold. You must have just joined us as I was about to wrap up about gold earlier, Paul, my friend. But certainly it's bid. This is the gold on the daily time frame. It remains bid. We've got big support this week, which is held at 1920. The trend remains to the upside. We broke out here, as I've said many times over the weeks, here on the beginning of November with a big positive up candle that broke both the 20-day moving average and the 50-day moving average on the same day, and then followed through really aggressively. The pause for a day, big up candle, pause for a day, an actual down day, but then a big up candle took us all the way to 1775 here. By the 10th of 1750, then 1775 when the uptrend cooled and retraced, but still held the key 1750 level, and then up, and then the big break here at the beginning of December. You see the story playing out there. We've gone over the 200-day, but that provided support and resistance. Didn't know what it was doing, or didn't know what it wanted to do, into the 1800 level. Couldn't break it, couldn't break away from it. And then it was the last week of December when many people weren't trading, everybody goes away and come back and say, oh, look at that. By the time we started January, we'd broken away from the resistance at the 1800 level, and we were testing 1850. Then we followed through with a big up candle here on the 6th of January. It took us over 1850. Then we took a rallied strongly again to 1950, and we broke 1950 significantly into 1920. Big up candle took us up, and then this week we've tested 1949 or 1950. So that's going forward next week. That still trend is still big, but as you can see here, the 20-day moving average is getting closer now. So 1920, 1900, two big support levels, and 1949 is the actual high, but really 1950 is the next one. I'm not going to click that link, Faisal, my friend. I don't know what it is. So, Sterling asks Langer. I'm going to make this the last one, guys, because I'm getting a bit tired now. I've been here an hour and a bit. So, finally, we're going to finish. Langer saying anything move. Well, it's continuing to move lower. This is the 5-minute on Sterling. So, dollars come back a wee bit. 15-minute. It's been angling lower. Most of the day, as we said earlier, and certainly the 1 hour has been lower here. This is 1 hour, from earlier today when it went under half of the Bollinger Band. So looking to go short there. Would have taken another short trade there as it went under the 50 at 8 o'clock or 9 o'clock this morning, gone sideways most of the day. And now it's lagged down, as I said, into the 200 hour. Again, money off the table because it's got to the 200 hour for many people, but 123.50 currently. But as I said, the daily remains bid, needs to break 125. I said all that a minute ago, didn't I? I'm going mad. Paul's saying, Terry saying, could you help me with more lights on psychological levels? Yeah, throw more light on psychologicals. Terry, psychological levels are those levels that we think about. That's what I call psychological. So big round numbers. So as you can see, this is a great example. Sterling, 124.000. That's a psychological level. 120 for cable is a huge psychological level, traditionally and historically. So those levels are very, very key. So anything that ends in 0 or a 5 tends to be what our minds like to think about in simple terms, because it makes thinking easy. That's all psychological levels are. So when you see things stalling, it's at 125, just like it did here in the last rally up to 124. This was this rally up through November and December. Where did it stall? Well, it stalled at 124. And we know that now for January, but in December it only tested it for 3 days before it dipped away from it. Now it's tested it for 1 to 8 days, and it's consolidated. It hasn't moved away from it, has it? So it's still sort of bid. It's still looking to perhaps break out, but you can't decide that yet till it does. It is going to break out from 124 and get very quickly to 125 and these new highs, or it's going to break from here and move back to test 120. A lot of it will depend on what the central banks may or may not say, what their outlooks may or not say next week. So we've got a load of data next week. We've had a load of PMIs. It looks like the Fed are perhaps, they're obviously going to 25 basis points. Is that the last hike? How long are we going to be at this level? Will we get to 5%? Some are saying that might happen, but there we go. Right, Michael, I'm going to make you the last one because you've just arrived. The GUI 4 hours, and well, we're here, aren't we? So, there we go. I'll finish this here because I can. There's that 124 psychological levels as Terry was asking about. So that's the daily resistance, 124. 8 days we haven't been able to break it. So 4 hour, you can see how significant that 124 level is. So we've rallied up, but it's consolidating. So this was all of this week in the 4 hour candle, so it's not doing very much. So 4 hour has support there, the 20 day or the 20 period moving average and the 50 period moving average on the 4 hour is here where we are now, 124.50, 123.50. So another big round number. On the 4 hour traders, if that breaks, the bottom of the Bollinger Band is the next support level, which, as you can see, takes you below testing the last sort of week's high, back to last week, which sits at 122.80, or 88, 87. So That's the next resistance level if this breaks. See how this didn't really break earlier this week. So the 50 period, but it's risen up now. So is it compressing this? Is it looking to break out of here? It's a bit of a, it's a rising wedge. It may break. It may break to the upside, going up to the 4-hour traders. And your other argument was, sorry, 1 hour. The 1 hour's messy. As I said earlier, it's been short today, then it was short again, and we were into the 200 period moving average on the 1 hour. So again, will we break it? We didn't break it here for very long. On Wednesday, we broke it for a couple of hours and looked like we were going down quite significantly, but we reversed very aggressively here on Tuesday. Is that Tuesday? Tuesday, Wednesday, Thursday, Friday? Yeah, Tuesday, when the data came out at between 5 and 6 o'clock. So yeah, that's biased lower, 1 hour. 4 hour is congesting, may break lower, but the daily is congesting at highs, and it's way above the 20-day moving average. It's all the way down there at 122. So 4 hour, 1 hour look like they may be rolling up. It's too early to tell. Daily is still bid, but we can't break 124. Okay. Right, Terry, thank you very much. Hope that made sense. Michael, thank you very much. Langer, thank you very much. And everyone else, thank you very much. I'm going to call it a day because I'm getting a bit tired, and it's Friday and I want to go home and see my grandson, give him a cuddle. I haven't done that yet for a week or so. So take care, everyone. Protos, thank you for your kind thoughts, my friend. It's been a wonderful experience to join the live webinar. Kudos, man. Kudos, man. Right, okay. Kudos to you as well, my friend. Have a great weekend, everyone. Stay safe, and we'll see you all next week. Massive week, guys. Next week. Remember, you got to be in it to win it. But this business is always about managing your losses, accepting. When you've got it wrong, when it goes wrong, it happens, and it happens an awful lot of the time. And just accept it. There will always be another trade. There will always be another opportunity. So, until next week, have a nice weekend. We'll see you all again. Take care, stay safe, and see you soon. Bye-bye.